so in love with you.
Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers. The housing market has already begun to crash. Now, from this point forward, the housing market will continue to cool down, so much so that it will lead to a housing market crash around the nation. Buyers right now are completely quitting the market at record paces, or they're being completely priced out of the market because of the surge in house prices and the surge of interest rates. So what we're going to do today, guys, is we're going to jump into a couple articles. One article that kind of goes into what the Federal Reserve is doing. Another article, we're going to go into the recession. We're going to take a look at a couple graphs from Fed economic data, and I'm going to access my MLS and review my local housing market just to see if we can see any cooling and crashing going on in Houston. And you guys know that I just made a video on Thursday. The reason I'm making another video showing my MLS is because in just those 3 days, we have had a surge of inventory hit our market. So I'm going to show you guys the price cuts. I'm going to show you guys how long houses have been on the market, and I'm going to show you guys price per square foot. Now, a lot of you guys know that I've been house hunting for a house at $120 a square foot. A house just came on the market yesterday at $108 a square foot in my local area. So the housing market, you guys, it's already cooling down. We have hit the peak. We are past the peak now. So the only room we have now is down, right? So now it's going to start going down. We've hit that max peak in the housing market. Time to go down. Now, obviously, you guys remember, I'm not a financial advisor. I'm an opinion sharer, right? I love my YouTube channel, you guys. I love sharing my opinion. Now, as my career, I am a loan officer in Texas and a realtor in Houston. If you guys could please do me a favor, like this video, subscribe to my channel if you haven't already, and as always, comment, share with us your insights. Now, we're going to get started with an article from Fortune right now, just to kind of analyze what the Federal Reserve has done and is doing. Check this out. Okay, guys, this is a little bit of a snippet from Fortune. I'll have the article referenced in my description. This is what it says. The increasingly hawkish Fed will start by upping the federal funds rate. The interest rate it charges banks 50 basis points this month. That's the largest single month hike since 2000, which is what, 22 years, you guys? So in 22 years, they haven't done this. So that's a couple decades. It's pretty astonishing if you think about it. The central bank also said it'll begin winding down some of its treasury securities and bond holdings, and that could be really bad for us. Those, well, really bad as far as interest rates going up, but actually we want interest rates to go up. So it's kind of actually good. I mean, bad as far as like affordability, right? And interest rates surging. But the reality is actually we want that. Those actions should cool consumer demand or kill it, while reducing money supply in the economy. These policy moves are also a direct hit to arguably one of inflation's biggest drivers over the past year, the red-hot U.S. housing market. In the Fed's eyes, it can't rein in inflation unless unsustainable home price growth, which is up 19.8% over the past 12 months, decelerates significantly. So you guys, make sure to listen to my videos very carefully. Every once in a while, people get a little bit confused on what I'm saying, but I'm saying things very, very specific because there's a lot of different things happening right now. Now, what I really want to point out here, guys, is remember this, okay? This is really, really important. The Federal Reserve has just started, right? They have just started. So all the things we're about to talk about, remember this, they're fixing to continue to accelerate as far as interest rate surges and things of that nature to combat the massive, massive inflation right now. So we are fixing to go forward this year with things continuing to follow the same trend. And essentially a lot of different factors are attacking the very toxic sellers market, which I love. I absolutely love this information. Let's finish out the Fortune article right now. Now, I like this part, guys. This goes into mortgage-backed securities a little bit, which is a huge factor on why the mortgage interest rates have surged so much the way they did. Let's read this. Between June and August, the central bank plans to unwind $30 billion in treasury debt and $8 billion in mortgage-backed debt each month. That's scary. We're probably going to have a massive surge of interest rates coming in Q3 of this year. Then in September, the Fed will double the amount of debt it lets expires each month to $60 billion in treasury debt and $35 billion in mortgage-backed debt. As the debt expires, it could put upward pressure on mortgage rates. If you really analyze that and look at where we're at and where we were, that's actually really scary. I've anticipated that by the end of this year, we will see, possibly low 7%. I now believe that's likely to happen Q3 of this year. I'm going to just change my guesstimate, and I'm going to say actually Q3 instead of Q4. We're going to see interest rates in the 7% because the Federal Reserve has no choice but to do these things. There are no choices. Unlike 2008, remember this, okay, that the Great Recession, we did not have this type of inflation. So we could lower rates in 2008. Right now, we can't do that. We have to increase rates when we kind of also need them lowered in certain ways because of the inflation, right? So this is going to be very interesting, you guys. We're probably going to see things that we never thought were possible. I don't think we're going to see any 8%. I don't think we're going to see 8%, but that's also possible. So anyways, you guys, keep an eye on their balance sheet. Keep an eye on them selling mortgage-backed securities, and keep your eye on the 10-year treasury yield, right? So it's over 3%. Now, if that gets to 4%, doomsday all over again on top of doomsday, right? But again, preparation will allow you to succeed. So what I'm saying specifically is prepare, right? Don't be scared. Don't get emotionally distraught. Just prepare, right? Prepare, be successful. Pretty simple solution, don't you think? Now, what we're going to do now is I'm going to show you guys the reason why the housing market is going to crash. And essentially that's because demand is going to dry up. I'm specifically saying that the demand and the ability to even afford a house right now is nil. People can't even afford houses. That's why they're quitting or they're being priced out. But I want to look at two Fred graphs right now. One, just to analyze the surge of interest rates. The second thing is to analyze the surge of median home prices. So essentially, if you're buying right now, it's a double whammy. Not only do you have a record surging interest rates, you have record high houses. So you're going to buy at the very, 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 very peak if you buy right now, or if you bought last month. Take a look at these graphs so you guys can kind of see what I mean. Okay, here's the first graph, guys. This is the median sales price of houses sold for the United States. Now, this just updated the Q1. Now, look at this. So Q1, it's saying the median home price for a house is $428,000. So the median sold house, $428,000. That is crazy. Look at where it was at right after COVID, right? So right after the lockdowns, look at this. It just, went from 322 to 428. That's over $100,000 increase. Now, this is a 5-year graph. So look at how the housing market has gone as far as value the last 5 years until post-COVID skyrockets up, right? This skyrocket right here is why I think there's going to be a crash and why I know that we are in a bubble. Now, I can see home prices coming back down to about 360 on average, maybe 380 on average. Right now, again, 428. That's higher than I thought it was. So that's one reason. Now, look at this other graph right here. This is the 30-year fixed rate mortgage, right? So look at this is a 5-year graph. So, a little bit of a surge right here in 2018, kind of balanced out, surged a little bit. Another surge here at the middle of 2018 or third quarter of 2018, followed by a trickle down. But look at this massive skyrocket. And this skyrocketing surge right here, guys, is why I'm saying this was a rug pull and why that the interest rates going up so high was so damaging to the seller's market. Again, though, you guys, this is what I want to happen, right? This is what we want. We want it, whether you understand this or not, we actually want interest rates to go up because we need the red hot housing market to cool down. It cannot sustain at this pace. It is not grounded in economic fundamentals. Remember that. Don't act surprised, okay? If you're one of those people that think that it's impossible for a housing market crash, real estate only goes up, that's crazy. Why would you disregard the last 80 years, the last 100 years of how the housing market works? It completely blows my mind how much emotion clouds people's minds and then spreads. Now what I want to do is let's access my local MLS, and I want to show you the increase of inventory. I want to show you some price cuts, and I want to show you price per square foot. Take a look at this. Okay, guys, so here's my local MLS, and here's Houston. This is where I live. If you guys need help in Houston, reach out to me. Now, I'm going to go a little bit north of that to this area because this is what I've really been tracking with my subscribers. Now, what I'm going to do first is let me change the criteria so you guys can see option pending and stuff of that nature. just so you have a bit better idea. Now, as you can see, obviously the homes in green are still active. The ones in orange have a contract, right? So they're pending. But I really want to point out and go back to my Thursday update videos. If you guys want to, see this again, look at how much more green we had, right? This almost looks like double or triple the amount of option that we have as far as purchasing homes than just a month ago. So there's a lot more inventory than just a month ago. This is really wild. We keep getting houses like every week and a ton of houses. So the supply is now, or homes coming to the market is now exceeding the buyers, putting crazy offers on houses. And that's what I've noticed. Now, all of these down here, guys, a lot of these are price cut. Let me pull this up just so you guys can see. This is a price cut of 16,000, been on the market 19 days. Let's go to a different one real quick. Let's go here also, see what we got. Okay, this has been on the market 37 days. This has a price cut of $25,000. So sitting on the market for over a month, price cut of $25,000. But take a look at this as well, guys. So not only do I have a lot more inventory in just 4 days, right? So in just 4 days, I have a lot more inventory. I'm seeing a ton of price cuts, but take a look at what I found over here. Now, obviously, don't forget, I've been looking for $120 a square foot. Look at this listing that came on the market, $118 a square foot, right? So it's going down. I'm starting to see more and more houses under $120 a square foot. Now, that's good news for me. Now, I understand that different markets across the nation are way higher than $120 a square foot, which is why it's so important to understand your local market. In my local market, $120 a square foot is the cap that I want to pay on something. So it's really important that you study these trends in areas that you want to purchase. Now, here's the thing, you guys. More inventory on the market, less buyers demand, a whole bunch of buyers quitting, a whole bunch of buyers being priced out of the market, sellers now cutting the prices on their homes being on the market much longer. Do y'all see what's happening here? The cool down is actually happening a lot faster than a lot of people anticipated, including myself. And I've been talking about this, for a couple months now. And I figured I was conservative as far as my picks, but it's actually happening a lot faster, which is really astonishing. Now, here's one thing that we haven't talked about. Now, I think all of these things alone will lead to a potential crash. But what we haven't discussed yet is a recession. You guys, listen, it is possible that we are in a recession right now and do not even know it. Remember, a recession is 2 consecutive quarters of negative GDP growth, right? First quarter of 2022, negative GDP growth. Take a look at this article right now. And you guys, this is by Herald News, okay? It says the economic headwinds are getting stronger with negative GDP growth in the first quarter. Inflation at a 40-year high and fresh supply chain troubles with China locking down major cities, ports, and manufacturing hubs over fresh coronavirus fears. The stresses are being felt from small businesses and the gas pumps of Southern Oregon and Northern California to lock down Chinese cities and ports. The U.S. economy posted negative 1.4% economic growth in the first quarter, according to the U.S. Commerce Department. This is the first negative quarter for the U.S. economy since 2020 at the start of the pandemic. So, in other words, you guys, the writing is on the wall. Now, I'm going to conclude this video with some general opinion that I basically developed from reviewing all of this data and following it. Now, here it is, okay? Here's the bottom line. You don't want to buy right now, okay? This is what I'm saying. I know there's a ton of reasons to buy. Some people have to buy. I understand that. If you have to buy right now, still buy right now, still do all the normal things, but have the right mindset. But here's what I'm really saying. Don't buy right now because we are at the absolute peak and it's already going down. And if you allow the dust to settle, if you allow the interest rate surging, the selling of mortgage-backed securities, and all of these other things to keep working, the dust will continue to settle. We will continue to have more inventory. We will continue to see home prices drop, and we will eventually have our buyer's market back. And if you're in the market to buy real estate, why? And if you could wait, right? If there's no emergency, if you can wait, why buy at the very worst time in the history of the U.S. housing market when all you have to do is potentially wait a few more months to get a much better deal? You don't want to be like a lot of these buyers that already have buyer's remorse, especially the buyers that are waiving their inspections. The fear of missing out got so bad, people were waiving their inspections, right? Which is completely outrageous. Any professional in our business that it has integrity will tell you it is absolutely a terrible idea to do something like that. But that just goes to show you how bad things were. And fast forward to today, things are already changing at record paces. Now, I hope you guys can see that writing on the wall as well. As always, you guys, thank you for watching my videos. Please comment below. Give me some more data. Give me some more angles that I'm not considering, because I'm a buyer in the market. I'm trying to get back to the market to buy my own primary residence. So I'm going crazy right now renting. Obviously, I already own real estate, but I decided not to purchase real estate again right now. I turned my primary residence into a rental. It actually acts as a safety net as well, just in case we go into lockdowns or there's any political craziness that no one sees that continues to sabotage us. So it is a safeguard. I understand that. Nevertheless, I'm still wasting my money in rent. So I really want to get back on the market. I've downsized to a smaller house with my family, with my children. So that puts a lot of pressure on me as well. I want to get them back in a nice house and for things to go back to normal, but I'm being patient, right? My wife is a supporter of that patience and that self-control. So I hope you guys are doing something similar to that. Now, stay prepared, right? Stay prepared credit-wise, income-wise, budget-wise, and I believe that you will be successful. Now, as always, you guys, if you're out there investing in real estate, I do wish you luck, and I hope you win.